Hi everyone, Alex from Summerhill here, just with another quick update. Given some of the recent volatility in markets over the last couple of weeks, we just wanted to provide an update on markets, what we have been doing and are doing to manage risks, and how you should respond. So we've been seeing markets pulling back in recent weeks, particularly with growth and textile companies over in the US, which have performed well since the pandemic, but essentially reached unsustainably high levels. And well-known names such as Netflix are down some 70-odd% for the calendar year. This volatility and uncertainty is mainly a result of a few factors at play. The Ukraine war, supply chain shocks around the world and COVID have led inflation to become higher, which is also resulting in higher interest rates. But some assets, like I said, during the pandemic simply reached unsustainably high levels and are pulling back a bit. Now, amid these rather complex factors at play this year, value style companies, so these are companies which have stronger cash flows, steady income, and are considered undervalued compared to their intrinsic value, have outperformed growth companies. Now, growth companies are companies where, in many cases, earnings are low or there's no income at all, and they're valued based on their future potential earnings. Now, although past performance is not an indicator of future performance, you tend to find that value stocks outperform during inflationary periods, thanks in part to their strong fundamentals. And it makes sense. In an inflationary and rising interest rate environment, current earnings from companies tend to become more valuable than future earnings. And when prices are climbing generally, companies with actual earnings are potentially better positioned to increase their prices and retain their profit margins. As you know, for the portfolios that we specifically manage on a client's behalf, we take a broadly diversified approach by investing in the entire market rather than selecting a handful of stocks. But we also have tilts to areas of the market that academic research has shown to have higher expected returns over the long term, such as value style companies. So how we've been managing some of these risks and challenges at present is by having a reduced exposure to overvalued areas of the markets and an increased exposure to areas with higher expected returns. This certainly doesn't totally avoid fluctuations in portfolios associated with markets, but we believe these investment strategies place our clients in a stronger position to manage some of the risks at play at the moment. Now, in times of uncertainty, it's tempting to try and time the market, i.e. sell ahead of falls and buy in anticipation of gains. But I'd like to remind you all that no one can predict the future, and furthermore, no one can predict how markets will react to short-term changes based on unknown events. Making significant changes to your investment strategy out of fear in times of uncertainty can have far more catastrophic consequences to your long-term wealth than the actual event itself. A clear example of this was during the COVID pandemic over the past couple of years. Those who sold investments on the back of a 20-30% market pullback in March 2020 didn't predict markets would be much higher 12 months later. And they had to make the very hard decision of when to buy back in. And you find that with many who take this approach, they end up buying back in at higher prices given the fear of missing out. And this is a typical roller coaster of investment emotions that is precisely what you should be avoiding, i.e. selling low and buying high. The reality is that times of volatility and uncertainty, such as now, is when opportunities can arise if you keep a level head and think about the long term rather than being sucked into the current narrative. Now, stocks could fall even further from here. Things could get worse in the short term. Successful investing can be really difficult in times of uncertainty, but given the difficulty in predicting events and how markets might react, the response for what you should do now is a familiar one. Time and time again, markets have rewarded those who stay focused on their goals and on what they control, and maintain key investment principles such as time in the market versus time in the market, having an investment strategy tailored to their goals, broadly diversifying, having a flexible investment approach to manage risk, and not reacting out of fear to news and events. The investment strategies we employ, such as due diligence and investment selection and risk management strategies that we think about ahead of time, provide their value in situations like this. We can expect markets to continue to fluctuate, but you should not let the crisis of the day affect your long-term strategy or sentiment. We'll obviously contact you directly if we believe you should be taking advantage of some of the current market weakness or making changes to your portfolio at all. However, please of course contact us if you have any queries or concerns. Now, finally, the federal election is obviously coming up at the end of next week. Australian election campaigns tend to result in a period of uncertainty as well, but seems to be somewhat dwarfed compared to other world events happening at the moment. Based on history, it's not obvious that a victory by any one party is the best for shares and property in the immediate aftermath. And historically, moves in global shares have played a bigger role in the short-term fluctuations to markets in Australia than the election outcome. The relatively modest difference in economic policies between the Coalition and the Labor governments suggests minimal impact on investment markets if there is a change in government. And it's viewed that the main risk for investment markets may come if neither the Coalition or Labor win enough seats to govern. But again, the takeout is that the election is something that should not be necessarily impacting your investment decisions. Now that's it from us for today. If you have any queries or feedback, please don't hesitate to let us know. Thanks.